Hello, hi, and welcome to the market update from 8 to 12th of July 2024. So let's start with the world economy. The US came out with their consumer price index for the month of June, which dipped to 0.1% from May. The core CPI number stood at 3.3%. Fed Chairman Chair Jerome Powell said that the US is no longer an overheated economy with the job market that has cooled from its pre-pandemic extreme and in many ways is back where it was before the health crisis. UK gross domestic product growth came at 0.4% in the month of May, which was higher as compared to the flat GDP in the month of April. Now moving to our immediate neighbor Pakistan. Pakistan has approached China with a formal request to restructure its USD 15 billion energy debt to help the crash-strapped country wriggle out of its financial woes. China has set up about 21 energy projects in Pakistan with a total cost of USD $21 billion, which included USD 5 billion in equity. The Chinese investor obtained the loans for these projects at an interest rate equal to LIBOR plus 4.5%. Now the Chinese energy debt of USD 15 billion has a payment has to be processed by 2040, which would amount to USD 16.6 billion according to the government sources. The proposal involves extending this debt repayment to from 10 years to 15 years. This would reduce the outflow of foreign currency by USD 550 million to USD 750 million per annum and decrease the prices by rupees 3 per unit. Pakistan has reached a staff level agreement for a new $7 billion loan from the IMF, as stated by the IMF on the Friday. The new loan deal will last for 37 months. Moving on to another neighboring country, Nepal. In Nepal, Pushpa Kamal Dahal Chanda on Friday lost the vote of confidence in the parliament. Its coalition partner, Communist Party of Nepal, Unified Marxist-Leninists, withdrew support and vowed to lead the government itself. Their chairman, KP Sharma Oli, supported by the Nepali Congress, is set to take charge as the new prime minister. Germany came out with the news on Thursday that it will phase out the use of components from Chinese telecom giants like Huawei and ZTE 5G networks in coming years due to national security concerns. China came out with a CPI number which rose 2.2% year-on-year basis for the month of June, which was down from May's 0.3%, but this is a fifth straight month in positive territory. China export also rose sharply in the month of June, while the imports were on a decline. The Customs Department said that there was an increase in import by 8.6% year-on-year, up from 7.6% in the month of May, while the imports has dropped by 2.3%. Indian Prime Minister was on a Russia visit. The key highlights of this visit was Russia will discharge and facilitate the return of all Indians who reportedly were working for the Russian army. India has refrained from criticizing Russia and has increased its purchase of cheap oil to the record levels. It has urged the Ukraine and China to resolve the conflict through dialogue and diplomacy. It said that for a bright future for the new generation, peace is most essential. Peace talks do not succeed amidst bombs, guns, and bullets. Prime Minister Narendra Modi was ceremoniously presented with the Order of Saint Andrew the Apostle, the first called Russia's highest civilian honor on July 9. Russia and India have set up bilateral trade target during this meet for $100 billion across a broad base by 2030, which is up from current level of $65 billion enhanced investments. The utilization of national currencies for trade settlements and expanded cooperation across various sectors that include energy, agriculture, and infrastructure. The development of a bilateral settlement system using national currency allowing transactions like crude oil purchased by India to be paid in Indian rupees, which can then be utilized by Russia for imports from India, with reciprocal use of Russian rubles if possible. India came out with the CPI number. The CPI inflation rose to 5.08% in the month of June from 4.8% in the month of May. The inflation in the food basket inched up, led by higher inflation in specific food categories, including vegetables, pulses, and cereals. The prices of staple vegetables rose sharply by 29.32% year on year. The core inflation was held steady at 3.1% and remained largely benign. Core inflation has consistently stayed below 4% threshold for 7 consecutive months now. India also came out with the IIP. If we look at the IIP numbers, the India's manufacturing IIP number was at 5.9 in the last 7 months, showing that this was a highly increased output. Electricity output was at 12%. This was mainly because of the heat waves that India faced in the last few months. Manufacturing activity also grew by 4.6% in the month of May, which is with the largest contribution coming from the basic metals, the double digit. Export-oriented sector gave a mixed result, where the wearing apples were up by 9.8%, textile was down by 0.7%, and leather grew by 1.3%. The growth in infrastructure and construction, which were the main drivers on the consumption side from last few months, moderated to 6.9% from 8%. Consumer durables saw an uptick with 12.3%. Non-durables was at 2.3%. US 10-year Treasury bond yields were trading in this week at 4.16%, largely in the range of still above the range of 4% for last few months now. If we look at how the global markets have performed the last week, all the markets were in positive. The US market was up by 1%, close to 1%. European market was also in the range of 0.5 to 1.5%. The Asian market was also in the green, led by the Hong Kong market by 2.7%. Indian gift nifty was also up by 0.8%. If we look at the oil prices, the oil was trading at $85.27 a barrel. The gold was up by 0.3% at 73,285 per 10 grams. For the week, FIIs were again positive with they bought 3,843.99 CR worth of equities. DIs also bought 5,290 crore worth of equities in the last week. If you look at the weekly performances, Sensex was up by 0.6%. Nifty Bank was a bit lower at close by 0.7%. Nifty Mid Cap and Small Cap was in a flattish range. The valuation, as we have been discussing for the last few weeks, have been on the higher side. Even the Buffett indicators show that the Indian market is modestly overvalued. If we look at the Indian bonds, the Indian government bond is trading at 6.986%. The yield curve in the short term, medium, and long term is flattish. That is all from my side. Hope you enjoyed the video. Do share, subscribe, like to our video for more videos.